Welcome to a Wiser Retirement podcast. Before we get started with the episode, I want to tell you about a new ebook available on our website called Buyer Beware. Why do they keep trying to sell you that annuity? This ebook covers the various types of annuities, negatives to owning annuities, and better investment alternatives to annuities. To download this ebook, you can click the link in the episode notes or go to wiserinvestor.com and you'll find it at the bottom of the page. Now on to today's episode.
Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Missie Beach. Hey, Missie.
Hey, Casey.
So today, we kind of have a special edition of our podcast. A lot of our clients here at Wiser Wealth Management, maybe about a third, are in the airline business, flying airplanes, airline pilots. I have a background in aviation, and that's kind of naturally where our business was kind of born out of a long time ago. But I think that anyone who's saving into a 401k now can get a lot out of this podcast as well. So make sure you stay tuned.
Universal advice.
That's right. So in the pilot world right now, there's been a lot of talk about market value, cash balance plan. And this is really what this whole podcast is going to be about, but we got to kind of build up to that first. First of all, 401ks are relatively new. When you think about in the scheme of things of investing, because a long time ago, our grandparents, they all had pensions, right?
Yeah. And half a century old?
Right.
Even that now?
And so now we kind of transitioned into 401ks. In the airline world, there were pensions at all the major airlines, but after 9/11 and the airline industry getting hit so hard, a lot of those were, turned over to the government, which government guarantees pensions, right? So in place of pensions, pilots associations or unions have negotiated non-elective contributions. So essentially, an airline pilot is at any of the major Delta, American, United. They're getting a percentage of their salary put into their 401k for them in lieu of pensions. Mm-hmm. So this started off at fairly modest rates and has greatly increased. In Delta's newest contract, which is now the best contract on the street for now, is next year we'll be putting in 17% of whatever the pilot makes goes into the 401k plan. And so what happens is, you run into a period or you run into a problem in that there's a max number that can go into a 401k plan. But before I get started on that, let me backtrack a second. So I keep talking about major, there's also regional airlines. Mm-hmm. So what Delta will do is they will, in this case, they own a regional airline called Endeavor. Endeavor is the smaller jets that you fly on. The pilots and the flight attendants will be not wearing a Delta uniform. It'll have the same colors, but it would say Endeavor on the wings instead of Delta. Typically, as a pilot in your career, you would start at an airline like that, or you come from the military to go directly into Delta. It's gone back and forth depending on your regional, but there's been direct flows set up. So when you get hired at Endeavor, you fly there for so long, you automatically flow into the Delta system. It used to be a guaranteed interview. Other airlines like Envoy and PSA on the American side, you get hired there in 8 years, you for sure will be a American pilot. Delta's never quite gone that mm-hmm. direction. I'm not exactly sure where it sits right now with Endeavor pilots, but there is a nice steady flow. Mm-hmm. Now with a pilot shortage, there's really no pilot shortage at the majors. It'd be the regionals because they're the least paid. For example, when I first started flying for Colgan Air based out of Bar Harbor, Maine, in my early 20s, my first year pay, I think a total was maybe $14,000 or something like that after tax. It was very minimal. Maybe 5 years prior to me starting an airline career, guys and gals had to pay for their training. So they would get hired, but then they owed the airline like 16 grand or 30 grand. And then they'd have to pay it over time back to the airline. Isn't that crazy? Now it's flipped where you get signing bonuses. and you get paid a lot more money that first year. In fact, I think if you have an experienced captain at a regional who wants to go to another regional, they'll give them a pretty healthy signing bonus is up as high as $100,000. I get these postcards in the mail all the time. With these
trying to lure you away.
Right. They're not going to lure me away from Wiser Wealth Management, but they're trying to just find any pilot that has a pilot's license, which I still have my pilot's license, right? So anyway, so what we're talking about today wouldn't apply really to regionals. They aren't putting in a non-elective contribution into the 401k plans. They're still very much typical to what you would see at any other corporation. A match up to 4%, if there is a match at all. A lot of the regionals don't even have matches still.
Wow.
And the whole point is, no one's going there looking for an airline career. They're going there as a stepping stone, and so the airline's not going to invest in you in that way. When really what young people are looking for now would be upgrade to captain as fast as possible to get the captain time to be able to qualify to get to the majors.
Okay.
And it's all kind of filtered through different paths. If you're a minority, women, especially a black female, you didn't have to have any PIC time. You would just go straight into the majors because there weren't enough to check the boxes, right? And I think that has kind of shifted a bit. Maybe those interviewing now would say I need to stand corrected on that, but it looks like that really it's just qualifications at this point. Delta used to have a college degree. They've technically have dropped the college degree as a barrier to entry, which I don't necessarily need my pilot to have a college degree. I do need them to do math, and pretty quickly in their head if they had to. But there's tests for that at the very beginning.
That's good. Well, as a flyer, I kind of just want a pilot with the best qualifications. I don't really care about gender and race and all that.
Yeah, they're trying to check their diversity boxes for their shareholders and all the other things that go with that is what they're trying to do. Okay, so we know that maybe this won't apply to your regional first-time hire, but obviously when you get to Delta, United, American, Alaska, it's the same way. Then once you make $255,000 a year as a pilot, you can't put any more into a 401k. So you can put in, I'm going to go with all the assumptions that you're under 50 years old. So you can put in $22,500, right? Mm-hmm. That applies to anyone with a 401k plan. That's the max. If you're under 50 years old, that's the max you can contribute. If you're over 50, you can contribute up to $30,000, as long as you're over 50 years old. So once you hit that 22.5, and the company's putting in, right now at Delta it's 16%, but next year it'll be 17%. So let's assume we're already in the 2024. Basically, it's $255,000 a year. So if you max out your 401k and they're putting in the 17% at $255,000 a year, you've hit the $66,000 limit.
The magic number.
It's the yeah. So there's a max. There's a max that you can put into a 401k, not your max, just total between you and the company. So us on the normal side of 401k plans, for most 90% of workers, we don't ever have to worry about that, right? Unless you did like an after-tax contribution, right? So that's another thing to think about too. If you have excess income in your 401k plan, and you work at a larger company, a lot of times their 401k plans will allow you to put in after-tax money. So you would put in money after tax up to the $66,000, and then that extra that you put in, you could convert to a Roth inside the plan. So that's called the mega backdoor Roth.
We like that strategy.
So that was something that we always talked about with pilots. But really at this point, that's kind of mute. You wouldn't really do that anymore if you're making over $255,000, which most of them would be after just a few years, and the company based on the progression from right seat to left seat that we've seen. And even in the right seat, they have what they call green slips. So they're picking up double time. It's like working overtime. You have your trips that you bid for, but you can pick up extra work, and that gets you closer to that 255 very quickly, or well over it. So what's happening now is with the market-based cash balance plan. I think I used the wrong acronym earlier, MBCBP, that Delta just started. It allows you to continue to put your money into the 401k or into a separate 401k, essentially managed by the company. So when that money goes in, you cannot control the investment. The investment will be controlled by the managing party, which right now is supposed to be PricewaterhouseCoopers, which is basically showing it BlackRock Target Date Fund as being 40% bonds, 60% stock. So if that's the case, then basically they're managing the money like you would a pension. So all the negativity about this plan, which I think is like, this is great, sign me up, right? All the negativity about the plan is like people say, well, that fund's only returned 4% over the last, 15, 20 years. What I could do better than that. So remember, for the pilots that affects this the most, it's going to be not the ones making $255. You're putting a few dollars in this thing every year. It's to be ones making $355, $455, right? You're the ones putting in the most, which probably means you're near at least halfway through or near the end of your career. So in that case, your tax bracket, I'm going to assume between state and Fed is around 34%. So by putting money into the market-based cash balance plan, you're saving 34% pre-tax, right?
That's huge.
It is huge. So how do you think that you're going to go make more than 34% investing in something else after tax?
You're not.
You're not going to do that.
No.
Leave it to pilots, though. We think we can outsmart anything, which is a great attitude to have when you're trying to figure out an emergency, but not necessarily in your 401k
not
plan.
in your portfolio, no.
So it just doesn't make sense that you would avoid this. Plus, as you age, you're going to bring in more bonds into your portfolio anyway. So if you're really concerned about lower rate of return, then you could treat that as your conservative allocation while you're using what you can control in your normal 401k, which should be millions of dollars. You can use that more aggressively. So it actually all balances out to be the right risk allocation.
Michaela and I had the same discussion last night that, it's not a big deal. Don't get hung up on the allocation being so conservative because it's not your only money.
I mean, we've ran multiple scenarios, and whether you live to 65, 75, or 99, it just doesn't, it makes sense that you would use the plan. Plus, what a lot of people haven't realized, well, the pilots have, is, we have to pay union dues. So we pay ALPA dues. Yes. So if you don't put money into, or if you're using the market-based cash balance plan, then those 2% union dues won't apply to that. So you're saving 2%. So that 34 is now 36%. So I think it's a great. Originally, there was some talk that the plan would not be in your own trust, and what that means is that if Delta went out of business, that money would go with it. And an airline is one economic event from going out of business. It's a very low margin business, right?
We already have Delta pensions that were turned over to the government.
Exactly. And if they had been worse off, potentially COVID, and it could have been a whole nother issue too, right? Mm-hmm. So it's important to the plan that this is your money. That's the pilot's money. They can't take it away if they file bankruptcy. Now, in a deferred comp plan, that's very different.
Oh yeah,
but
deferred
supposedly
comp, you're rolling the dice.
There's supposedly something else being worked on that is related to like deferred comp. So it'll be interesting to see the details on that as they come out.
Like additive, you mean in addition to
Correct.
The MBCBP?
Yeah. So really, in this case, I don't see any negatives in the math that we've been able to do. I think that if you're, first of all, it's important to recognize that if you're a Delta pilot and you're listening to this, you're not opting in, you have to opt out. You're already opt in by default. Mm-hmm. So you have to say, no, I don't want to do this. And if you were recently hired in the last couple of months, you're in it anyway. You don't even get the choice.
That's true. So if it's the plan for everybody hired now forward.
Yes.
Hey.
Correct. This is an added benefit once you hit that income amount. Now, for United pilots listening, this is coming to you. So you can watch all this and learn from all this because you'll be rolling this out, I think, fairly soon. Something else I want to note here too is Roth and traditional. So when you think about your future, and this applies to anybody listening to this podcast, we don't know what future taxes look like. But when you look out into the future, I want to have options. Mm-hmm. But at the same time, doing everything pre-tax now saves you a lot of money. Mm-hmm. And if you're over the age of, I think it's around 34, we'll say 35 to be safe. If you're over the age of 35, starting to do a Roth at a high income level just doesn't make sense. Because if you take that 34% hit, it takes a long time to get back to the break-even point in your account. So if you can let it all go in pre-tax and let it grow, and you pay tax on the other end, you tend to have more money at a certain age. Now, there is younger people that's not necessarily the case because they have decades to make up for it. Then it's free income that keeps growing. So what I like to see is just multiple buckets. So maybe you have some Roth from the past, and that's great. But let's assume you get hired with zero. Then maybe the first couple of years you could be doing all Roth. But then after that, you're going to switch to all pre-tax because that makes the most sense. But then you should have excess income if you're managing your money correctly. Mm-hmm. If you're not living beyond your means. And if that's the case, then the market-based cash value plan or balance plan is going to be growing with you, and that's company money going in there, not your money. So in the end, you want to put excess money, hopefully, into like a brokerage account. We call it the opportunity fund here.
Yes.
But if you can put money into an opportunity fund and you build that up over time, maybe that's a second home. Maybe that's something that you want to do is the big RV, or most pilots when they retire actually just don't want to move. They're tired of moving.
Go nowhere.
and they have big ideas in their 30s, maybe even early 40s. By the time they hit 65, they're just tired. Yeah. And a lot of them just stay home. But ultimately, in that opportunity fund, let's say that's available for retirement, you can live off of that between 65 and 70 at probably very low tax. I mean, if you've done your tax loss harvesting, you've built up tax credits going forward, or capital gains credits going forward over decades, you'll hit retirement with this really large IRA, but also no taxable income potentially, or very low taxable income for 10 years.
Yeah.
And you can use that opportunity to convert IRA to Roth. And so that's how I like seeing these options. Now, if the tax bracket's similar to what it is today, you could just do IRA withdrawals. That's not that big of a deal in retirement.
No, not at all.
So that's something to think about as you're looking at the whole picture. It's not, retirement savings doesn't have to be inside the 401k only. You can create other non or tax efficient buckets outside that. Stay away from annuities. Don't do that. But I think a tax efficient ETF portfolio, low cost, would be the way to approach that.
Yeah, very liquid. I mean, so your money is always your money, just really a click away.
Exactly.
One thing we didn't mention about the market-based cash balance plan, for those that are concerned about how conservative they think it is, the 40-60 mix, is that at age 59 and a half, you have the ability to do in-service withdrawals.
Yep.
So
you can always roll it to an IRA.
It out and then invest it however you'd like to. And so you're not stuck with that conservative nature forever.
Right. Yep. And they also have an annuity option if you want to annuitize it at the end. And I would never recommend doing that. Unless
you're just really, really bad with money.
And in that case, you're not listening to this podcast.
Yeah. Good point.
All right. All right. So let's talk a minute about something related, but a little bit different. So there's been a big push from a couple of companies here, Atlanta, Texas located, for managing pilots' brokerage links. So I just wanted to give my 2 cents about this.
Yeah.
So we did the math here. And if you are in your early 30s, you get hired at any of these majors and you contribute money to these plans and a 0.5% management fee is added to that, you're looking at over $2.5 million in management fees
Over the course of your
course of your career.
Wow.
Which is crazy. So in all these major plans, they have low cost index funds.
Mm-hmm.
Very, very low cost. Like the average cost is around 0.03% in the Delta plan. I think
basically free.
Basically free. Companies carry the admin cost.
Mm-hmm.
So S&P 500, you can research this. It's called SPIVA, SPIVA. The SPIVA report comes out every 6 months, and it shows what active managers do versus the passive indexes. Not just the S&P 500, that's one we always talk about, but any index that they're supposed to be tracking, it compares them. So the stats get worse in other asset classes, but we'll talk about the S&P because that's what everyone knows. Over a 20-year period, you have a 2% chance of a professional manager, outperforming the S&P 500.
I don't want to take that bet.
No, I wouldn't either. Over a 10-year period, it's like 6% chance. Over a 3-year period, it's much, much higher, like around 35, 40% chance. So in the short term, which is where the mutual funds get their marketing from, right? Because they market only the best times, not the worst times. But that being said, what makes you think paying 0.5% to an active manager to place trades in your brokerage link is going to be successful? If you're playing the long game, 10 plus years, you have a very, very high probability of doing better, but not tinkering with your portfolio and sticking to really 4 investments. You've got the S&P 500, so your large cap. You've got your mid cap and small cap, right? And your international. And then, of course, you add bonds to that. But for most people aren't active bond traders. They're more active stocks, right?
Yeah.
So if you think about those stocks, they're equities, then why on earth would you hire someone to manage your brokerage link for you?
Not for millions of dollars.
Yeah, and I'm so passionate about this. I saw this when I was flying and actually created a website. We recently revamped it. But if you go to our website, wiserinvestor.com, you scroll down near the center, there's a airline tab. That'll take you to the pilot retirement website. Right. And you can download, we track all the major 401k plans. You can download free allocations. These allocations were built using, just modern portfolio theory, right? Risk-adjusted portfolios. You take a risk quiz. Risk quiz helps you identify which portfolio could be right for you, but you can move up or down based on how you feel about that. And you rebalance it once a year, and that's it. That's all you have to do.
Right there on our website.
Right. And it's free.
Free
and
from Wiser.
Right. And it's free. So this is something that started when I was doing the ALPA workshops for ASA ALPA, Atlantic Southeast Airlines. This is something that I started for our own guys because people were just making a mess of their portfolios. Yeah. And at the time we had a lot of things in our portfolios that were not passive. And after a merger, it all greatly changed. But in the end, pilots have got to stop thinking that you can beat something. Mm-hmm. And it's not just pilots, it's human nature. Anybody listening to the podcast who has a 401k plan had a pretty dismal 2022, right? But that's 1 year out of many, many years. If you look the last decade, investing's been pretty good for people who are patient. Yeah. And that's what you have to be, is patient. Just set it in the portfolio, take a look every 12 months and rebalance. That's really all. It's what I call long-term healthy asset classes. Yes. These are asset classes that have always made money. The cost of entry is very, very low. Now, when you hit retirement, things change. The Delta, or any 401k plan for that matter, is not built for retirement. No. When you go to build a 401k plan, these aren't random funds that get put in there. There's an investment policy statement, and it all starts with a census of the employees. Typically, there's no employees there of any significance over the age of 65 or 70, right?
Yep.
And so therefore the plans get built for younger people. So when you retire, how you manage bonds is different. How you manage your cash reserve is different inside the plan, inside your 401k plan. So you do need an asset manager to be successful in retirement.
Oh, absolutely.
But you don't need that asset manager there charging 0.5%, right?
No, but you need to make sure that you've got it well allocated with those index funds.
Correct. And to give you the confidence that you have everything correct.
It's set.
What we're offering for the pilots or anyone who is in the same situation is really flat fee planning. For a flat fee, we're going to put together a real financial plan, not one just based on what we can sell you, because we don't sell anything, but one that's really based on how's your auto and home and umbrella set up? Are you really protected properly? What about your estate planning? How does that work into your overall financial planning, right?
Yeah.
How's your asset allocation in your 401k, but how is it also in your spouse's 401k? What about that brokerage? How many IRAs have we said, hey, there's no reason to have this rollover IRA from your old place, roll it into your new 401k plan, get everything, consolidate things, right? Especially if you're at one of these bigger airlines that have such low fees. But what we do is we just charge an hourly rate going forward to monitor and update the plan.
Yeah.
And to me, that's a much more sensible way for people to be doing real financial planning. Tax planning is included in that, right? Real financial planning, not selling products, and allows the pilot group to be able to focus on the long term with that in an unbiased way.
Yes. And I think another area of our planning that pilots and all clients have found really useful is life insurance, because we look at it and we can tell clients if there's a gap in coverage.
Right.
You know, I always say if that proverbial MARTA bus comes and hits you today, like, is your family going to be okay? And we know that, you know, Delta provides the opportunity for good term insurance, but still with the high income of pilots, there's usually a gap.
Right.
And what I tell my clients is, you know, that we sit on the same side of the table with you and we don't sell you anything. So, you know, if we are telling you need another $500,000 of term insurance, you really do.
Right.
And because we don't care where you go buy it.
Correct.
But you need it.
We do have some great referrals of people that we trust.
Absolutely,
But you could buy it off the internet.
Yeah.
And it doesn't matter. The point is that as planners, we just know that it's needed. But it's something that it's very, I don't know, it's very interesting. We've had some clients come in recently from these firms that are doing the brokerage links. And so I've gotten a first-hand view of the carnage. And it really is major active trading. It's not even just like, I was thinking, oh, this is going to be a lot of expensive mutual funds. It's not that the funds fees were exceptionally high. They were kind of average for what a broker would choose. There's just a lot of trades. And that is unnecessary. And so that's what kind of prompted this podcast. We typically try to reach a broader audience when we're talking, but I felt like this one applied now because of what's so much is happening in the airline space. An episode that you might want to consider listening to is episode 162. Is your retirement plan ready for takeoff? A friend of mine, Evan Bogan, came in. He's the captain on a 7-3 here in Atlanta, and we had a lot of fun comparing flight planning to financial planning.
Nice.
and how that relates. I also have done a couple of videos on this online. Avoid asset managers looking to manage your Airline 401k. And then one talking about the Delta Pilot market-based cash balance plan. That's on our YouTube channel, which is also called A Wiser Retirement. Thank you, Missy, for joining me.
Thanks, Casey. That was a really good overview of Delta's new plan and just in general for all pilots.
Reach out if you guys have questions. Happy to help our airline families.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.